Hey, good afternoon, everyone. It is 3:15 p.m. on Friday, July 5th, 2024. Hope everybody has had a great week. And this is Futures Brizio. As always, before we get started, make sure you smash that like button. Really helps the YouTube algorithm, and subscribe to the channel if you're just finding it for the first time. And don't forget to ring the bell notification so you get notified when I drop new content. And as always, this is 100% free content always on this channel. So let's just jump right in. Okay, so first of all, guys, for those in the U.S., as you know, yesterday was Independence Day, which was obviously a major holiday. So the market was open part of the day, but essentially there was no trading yesterday. And in the video I made earlier this week, I said there probably wouldn't be much going on today either on Friday, although the market has been open. Um, I didn't anticipate a lot of movement, but we actually did have some decent moves, and I have to kick myself a little bit because I did take one, which I'll show you. But the couple of other ones I really could have taken, but to be honest, I was not in front of my computer literally until about a few minutes ago here at 3 o'clock. So I didn't see any of these setups because I really wasn't planning on doing much today. I took the one trade I did take early this morning before anything really got going, and I'm still in that, and I may cut that one before the end of the day. But anyways, that's why I'm making this video, because ultimately there was some movement, and I did want to just show you those, given the with this methodology I've been talking about in the last couple of videos with the MACD and the Heiken Ashi smooth indicator. Okay, so let's just get right in. We'll just go through these five assets, and then we'll wrap it up. So we did have some news today. We had non-farm payroll in the U.S., which is the jobs number, and it came out a little better than expected. Didn't really do too much in the market. Things just kind of whipsawed around a little bit, and then things just kind of kept going the way they were. So that was relatively non-event. So if we start on the Dow, so this is the Dow, and you can see I just continue to move this blue rectangle to the right because we still are trading inside this range that we've been in essentially since last Friday. We still have not broken out of this range. Ultimately, I think it is going to break to the upside just by looking at the longer term charts, but I have not traded the Dow. It just continues to move. You can see we're just right now trading. We almost have like a secondary range right here. Okay, this is the larger range that's been going on since last Friday, but you can almost paint the secondary range right here, and we're just not moving anywhere. So I didn't do anything with the Dow, so we'll just move on from that. So gold, right here on this, the 5 minute chart of gold futures. This was non-farm payroll. You can see we had some nasty whipsawing for about 15-20 minutes, and then the uptrend continued. And if we go out to the higher time frame, we definitely are bullish, continuing making new highs here. And this was one where there was a good entry. We did have this entry down here before the NFP number came out. Now we had this huge whipsawing, so this probably took out a lot of people. Again, I wasn't trading this anyways, but this technically was a great entry right here if you could have survived this big giant wick. And this is just the Heiken Ashi candle. If you actually turn on the actual candle, you can see how big this wick is. Look how far down this wick came. So this was just before the news came out, and we had this massive wick. So anybody that was long in here that had their stop sitting just below here was easily taken out. So although this was an excellent entry, and I do want to point that out, if you could have survived this, then this would have been a fantastic trade. So beyond that, we also did have a signal right here, technically, and that actually would have been okay. It didn't really do anything for a while, but we had a little signal here, and then we had this one about an hour ago right here, coming off this little swing. And so technically there was a couple of entries in gold. Either way, the bottom line is the uptrend has continued, and this methodology would have nailed both of those entries. Okay, again, I didn't trade it, but I'm just pointing out the accuracy of the signals. Dow we already looked at. Okay, let's look at soybean oil. This thing just continues to rip to the upside. And here's today's price action right here. And you can see we had an entry right here. That would have been your ideal one. And then we potentially have another one forming right now. Now, of course, we're, I think the market is, I think this market closes at 2:30 Eastern time. So I'm going to say this market's closed now anyways. But we do technically have an entry right here as we speak on the 5-minute with the white line crossing above here and this bullish candle. So technically we do have an entry here, but again, I'm pretty sure soybean oil is done for the day, so there couldn't be any entry. But there was one here this morning just after 7 o'clock, and you can see that was a good trade and you could have still been in it. And again, this thing called it perfectly. All right, now here's the one that I'm in. So this is natural gas, and we had this big correction up this morning. But again, if we go out to the higher time frame, to the 4-hour, I had this level over here drawn out right here on the 4-hour chart. You can see this swing low down here, and you can see, price has now broken through that. So I felt pretty confident about getting into a short. Running into that area, I wasn't too confident. I was expecting maybe more of a reaction off this low over here, but we never really got it, and so price broke through. So I felt comfortable jumping into a short. So so back here on the 5-minute, we actually had 2 entries. We actually had one right here where price went down. Now it did come back and retrace, and if you had your stop too close, this would have taken you out for a loss, only to have it go in your favor. I actually got in at the second entry, which was right here, and you can see just below that was my entry here, this green line, and I'm actually still in this trade as we speak. All right, and you can see this has made a nice run down, and that's great. So that's natural gas, and I'm probably going to close this for the weekend, although I do think this will continue. I just don't like holding these type of trades through the weekend. These are commodity trades. If there's any big geopolitical nonsense over the weekend, this could easily spike and go the other way. So I probably will close this before the market shuts down here. But you can see, again, either way, it was a great entry, and it nailed it perfectly. And then finally on copper, this is another one that just keeps ripping to the upside. So here's today's price action, and we had a textbook entry right here this was around 11:30 this morning, and I really wish I had taken this one, because this would have been a nice trade. I probably would hold this one through the weekend. Now, if you want to get super technical, we had a little tiny entry right here. This one, if you took it, would have been a loser. Right here, you can just see the white line crossing over, okay? But you can see the corresponding Heiken Ashi candle right here is not good. These are all like little weak, small range candles with wicks, and this is only a 5-minute chart. So again, this is where you have to use a little common sense and intuition. But if you did take this one, put your stop here, you would have been taken out. And I mean, I guess technically there's one right here. This is really pushing it though, right here. And this one probably would have also been a loss. But you can see the difference on these good entries, like this one. When it starts going up, we have much bigger candles, and we have, in the case of a bullish market, we have no wicks on the bottom of these large candles, indicating strong price action, as opposed to these over here on these 2 entries, which are very small bodies, wicks on both sides, and just looks very corrective. So even though, yes, technically there was an entry here and another one here, again, this is where you have to use some common sense and just say, okay, yeah, technically it's an entry, but is it really an entry? And again, you can't just trade these blindly. Just because the MACD says there's an entry, you got to kind of use your intuition. And that's what I would do, just to look at the strength of the candles. And, are they larger than these corrective candles? Am I getting at least one without a wick on the bottom as it starts to move up? And we did have one here, and then this one, and then we just kind of rocketed after that. So this was clearly the better entry right here. These two, if you did take them, you probably would have been stopped out of both of these. And, that's a shame. Although even if you took both of these and had a tight stop loss just under these lows, you still would have more than made up for those two losses. Probably just where if you had taken this one, where you'd be sitting right now, you would have most definitely gotten back those two losses and probably been in the green on that, even if you did take these. But hopefully you didn't, because those are definitely not good entries. Just based on, yes, there's a signal technically, but the candles are not telling you there's an entry there. Okay, those are just part of the correction. Okay, so but this one I'm probably kicked myself more than anything else. That and probably soybean oil, which just continues to rip. Those two I wish I had taken in addition to natural gas. There was no trade in the Dow for me, and gold, although it did move, wasn't too great, so I don't really care about missing the gold trade. But copper and the soybean oil was yeah, you know, but what can you do, right? You can't have FOMO. Move on. Next week's a new week, and hopefully those trends will continue, and we'll have more entries to jump on if the setups are there. Okay, so like I said, guys, I was not going to make a video today, but just considering the market action was actually pretty decent. I'm very surprised, I have to say, for a Friday in the summer following a major holiday. I thought things would be really quiet and sideways, but we actually did have some movement, so hey, that's a good thing. And I did have the natural gas trade running, which I'm happy about. So, all right. So but you know, it was mostly just to point out the entries and the consistency with this very, very, very simple trading strategy using Heiken Ashi Smooth and a regular MACD 2-line indicator. Again, default settings 12.26.9. And again, this is the 2-line version as opposed to the MetaTrader version. But they all tell you the same thing. I didn't change any of the settings. I just changed the colors, and that's about it. But I just prefer this 2-line version over the MetaTrader version. But this is a custom indicator. So like I said, if you need help finding it, let me know. You can just Google it. You'll find probably a few websites that have it. It's free. Don't pay for it. So if you need help finding it, let me know. If you prefer this version over the MetaTrader 4 or 5 MACD, which, like I said, in my opinion, is not very useful, just the way they construct it. So, all right, so I'm going to leave it there, guys. I hope everybody has a great weekend. I will be back next week, and we'll see where we go with some of these trends. If we start getting any reversals, or if we're just going to continue on. And we'll see if the Dow can break out of that range and maybe give us a setup next week. All right. So with that, I will leave it there, guys. Again, make sure you smash that like button, subscribe to the channel. And if you have any questions or comments, leave them down below. And I will talk to everybody soon. Have a fantastic weekend.